Joining me today is Teo Dechev from Mundoro Capital. Guys, I find project generators super interesting because the ones that are really doing the work like Manduro are effectively building out a huge royalty portfolio that could one day take a path like Franco-Nevada, and which I know sounds crazy, but if you are a romantic about microcaps like I am, you're always looking for those opportunities. So I say this as just somebody who's just chatting with the company. I'm not an investor or anything. I find these models super interesting. Also, Teo's interesting because she's a former analyst, which means that she's not really talking in terms of those things that when we get the geo CEOs who are trying to make us fall in love with their projects, they don't always understand all the context or don't want to give us all the context or relative benchmarks that we need to understand why a project's great. We can sort of get those out of somebody who was a former analyst like Teo. Teo, thanks so much for joining us.
Thank you for the invitation.
So you guys are a project generator, mostly focused, I guess, in Serbia.
Yes.
And you are a former analyst, so I'm excited to chat with you. And I've got to ask, every time we see somebody like Robert Friedland have a great quote about copper and how there's this huge deficit and where the price could be heading, there's obviously a lot of hype on social media. But for you, from your standpoint as a former analyst and now somebody who's running a copper company, what's your read on the copper market right now?
Well, I think the general trend is very well documented. I mean, we've all seen that the supply is very tight. And by tight, I mean, we can meet current demand, but if we genuinely believe that we're going to be doing more electrification of the economy, so what does that exactly mean? And certainly one of the big things that people are talking about is the idea of the use of copper in the infrastructure for AI. If we believe that's going to roll out at the kind of the growth rate and the capacity required, then that is a whole new source or a whole new demand for copper that wasn't even in the models even 6 months ago. So I would say that demand is still finding new ways to use copper, but the supply is very short or very, it takes a really long time to respond. So we can't respond to the demand as it grows through the supply. And if you think about what that looks like, there's probably about 20 mines globally that meet the majority of the copper supply. So 20, that's a very, very small number. And that's, I think, also a reflection of the fact that whenever you see one of these mines that go on strike or there's some kind of an issue with the mine, it has such an immediate impact to the copper price. So that tells you from a supply constraints point of view, it's a very tight market and anything can bring it off course. So when you look at that from a pricing perspective, that just means that I think unless there is a major new mine coming online, and we haven't obviously seen that yet, and when you saw what happened in Panama, that's a classic example of why supply is going to be continuing to be very constrained, demand is going to continue to grow, and that copper price will just reflect that constrained supply and it'll keep going up.
Now, something that I think a bit about when I think about copper is how much these deficits are actually priced in. But when we look at what's happened with, say, a Cobre Panama and how that could have made up 5% of Panama's GDP, yet they still didn't want to move the project forward, or the country didn't. Or we can look at Adventus, who had a really great high-grade copper project in Ecuador, and they basically were struggling to find anybody who wanted to finance them. And it just makes me kind of think about the lack of copper projects that are being moved forward and what's going to happen to price. I mean, is it possible that the price of copper could go absolutely ballistic if we don't start moving projects forward more seriously? Well, what's going to happen here?
So regulations is one of those debates that we've been having for such a long time as an industry. It has become more difficult in terms of regulations, in terms of hurdles and steps over the last 10 years to put a mine into production. Copper mines in particular, just put our head frame around how big these operations are. The bigger they are, the more engineering that goes into them. So naturally, they will always take longer to put into production. And now you kind of layer in those additional regulatory hurdles. The thing is, because you have such a long lead time in copper to get them into production, you're building in that regulatory framework. And so it has an impact, but not as significant as to some of the smaller mines that are really getting slowed down. So The way that we like to think about regulation is as long as it's clear and there's a path through it, operations can work around those timelines. But if you have governments that are flip-flopping, making changes like, for example, in Panama, all of a sudden you can't regulate or you can't get through this next hurdle, that's where it'll have, again, the impact is on supply, and because demand continues to grow, the impact is on supply, and then the copper price will reflect that.
So let's talk about Manduro. What's the high-level overview for the company?
So you kind of framed it really well. So we are a generator. We generate opportunities for copper. Our focus is the copper porphyries. 70% of global production comes from copper porphyries. So I'm a big believer that if you're going to be in the copper business, you need to be in the porphyry business. But the caveat here is that if you're going to be in the porphyry business, you've got to have really deep pockets. So what we talked about earlier is that those windows for equity, do they exist? And will they exist consistently long enough in order for you to drill through a copper porphyry and go into the development phase? It's really tough ask for copper deposits. So that's why our model is to partner with the majors. So our partners currently are BHP and JOGMEC. And until just actually this year, we also had Vale as one of our partners. And previously to that, it was Freeport. And previous to that, it was First Quantum. So our model is create the opportunity in terms of a package with targets and then bring in the partners because they're always looking for more copper opportunities.
So tell me about Serbia. What is Serbia like as a jurisdiction? What do investors need to know about how much risk there is there? If I'm looking at investing in a company like Manduro, how do I get comfort with Serbia as a political jurisdiction?
Yeah, I think that's a really good question. It's not a very well-known country. Serbia is a candidate to enter into the European Union. And so they've been in a process over the last 10 years to really harmonize their laws with the European Union. From a jurisdiction point of view, we don't see it as a high-risk jurisdiction. And actually, it's ranked by the Fraser Institute as one of the top 10 in Europe, which is, I think, in a really good position. And I think previously they were even in the top 5. So when you look at Serbia, the way that you want to think about it is there clear mining law regulations? And is there a demonstrated path by foreign companies to go from exploration into production? And there is. So the big discovery in Serbia was Čukaru which was done by Reservoir and Freeport through a joint venture. Reservoir was the generator company similar to Manduro, and Freeport was the big partner earning in. Freeport ended up selling that position, and fundamentally now that deposit is owned by Zhejiang. And you can see that it went right from a discovery right through into commercial production. So there is a clear path for foreign companies to work with that jurisdiction to get a mine into production. That's why we believe it's a low-risk jurisdiction.
So when you guys get involved with a project, are you guys chatting with majors before you even decide if you want to invest time and resources into there? Like, I imagine that you have relationships with some of these major companies where you have a pretty good sense of this is worth spending our hours on exploring this region.
Yes, that's actually a very important part because we obviously want to create opportunities that will fit the type of partners that we normally option out projects to. So most of our partners are big companies. Again, the reason for that is because the big companies have the biggest budgets in order to explore for copper, but fundamentally those copper porphyries. So, and we have absolutely no concerns with joint venturing a project to a junior. The problem is, will they have that access to capital to continue through with it for the long term? And we see that the major companies, obviously have those deep pockets. So we do talk to them and talk about regions where they feel, from a political risk point of view, they can venture into. We look at the assets from a merit basis. So we decide, in that jurisdiction, knowing that our partners are prepared to go there, we look at what's the potential there, what kind of land packages can we put together for potential partners, right? In terms of getting the projects, what's that jurisdiction like?
What other region are you in?
So we're in Serbia and in Bulgaria, the neighboring country. So they're both in the Western Tethyan. And then alongside that, in parallel, we're also working in Arizona. And Arizona is obviously, in terms of copper production and copper production and let's call it copper tenure there, it's the second largest concentration of copper globally after Chile.
So you guys are also in Arizona. What can you tell us about your projects there?
So Arizona is a wonderful region to explore for copper porphyries. There's a lot of historical copper mines there that have been operating for 100 years. Obviously, one of the biggest and well-known players in that region is Freeport. And when you look at it from a copper domain perspective, globally, the current reserves, the historical production, and future resources in that state are second to Chile. So if you're going to be in the copper business, you should also be in Arizona as well. We think it's still a relatively underexplored, not from the perspective of a lot of the known deposits, but people haven't really branched out the way that we normally do undercover in other jurisdictions. So we think there's quite a bit of opportunity for more discoveries there.
So I'm going to ask you this because you're a former analyst. If I'm a retail investor and I'm watching this right now and I'm saying, okay, they have copper porphyry projects, but what am I looking for as a retail investor? If I see a company that says that they have a copper porphyry, obviously there's different types of metallurgy involved with different types of projects, but what kind of grades are interesting in terms of copper porphyry, in terms of economics, if I'm a retail investor looking at various companies that are doing porphyries?
Well, there's not a lot of companies that are focused on porphyries. So generally, when you look at the generator space, and if you go to our website and you click on the presentation, we've got a really good slide that kind of does a breakdown of all the royalty, streaming, and generators that are basically focused on this business model. When you look at the seniors, other than Franco and maybe Silver Wheaton, they don't really have a lot of copper exposure. So those groups are actually looking for more opportunities in copper royalties. The problem, though, is it goes all back to that comment I made earlier, which is there's probably globally 20 mines that produce the majority of that production. And what does that mean? Those mines are actually owned by a very small group of senior companies. They don't need capital. So it's really difficult to actually create royalties in the copper space unless you're doing it the way that Manduro does, which is right at that beginning phase of create the project, create the exploration targets, get the partners in, and now every single project we have has a new royalty generated from that project.
Are any of your royalties currently generating cash flow?
So it's a great question. What I call it is an exploration royalty. So traditionally in the market, what we all come to know as the word associated with royalties is what we call a commercial production royalty. So it is a royalty that starts paying when there's commercial production. But what we've designed is actually a structure where as soon as the partner gets involved, we start receiving payments right from time zero. So what we call that is an exploration royalty. The reason for that is because a royalty is essentially a contract between two parties. If it was between yourself and myself, we decide on what the asset is and what the payment structure is. So with, for example, all of our partners, they start paying us as soon as they get into the exploration option and right through until there's a commercial production. And then we continue to get the commercial production royalty.
So effectively, if I'm understanding your model, you guys could end up looking like a Franco-Nevada one day.
That's absolutely possible. Franco-Nevada actually started in the 1980s exactly doing this. They bought some royalties, but they also optioned out some projects. And that's actually, I think a lot of people lose sight of that because some of the big, particularly Royal Gold. Royal Gold was actually doing exploration in Greece back in the late 1980s, early 1990s, looking to find a project, or to make a discovery. And so a lot of people forget that. I think these models naturally transition into producing royalties, but it's a long term. And actually in our presentation, we have a slide on 2 case studies. One is that long route, which is we show Altius. Altius Minerals has done a fantastic job of showing from the generator right into transition of a production royalty. Whereas the other case study is you could be a reservoir where you make a really big discovery and you end up getting taken out as a result of the royalty you own. So I think both can make a very good return for shareholders.
But the idea here is that you guys are building out that royalty.
Exactly.
You guys aren't going out and acquiring royalties and trying to say that you're the next Franco-Nevada. You guys are going to go and roll up your sleeves, do the work, and that's how you're going to end up with your royalty portfolio?
Yeah, we actually create the opportunities. I mean, of course, you know, if an opportunity comes across your desk and someone wants to sell you a royalty on a project that you think has fantastic potential, you know, you have to think about what does it cost and what is it actually going to pay you back. And that is more of a balance sheet, let's call it strategy, than it is necessarily what we're doing, which is that science of exploration in order to create the opportunities and then bring in the partners and create a royalty.
Teo, thanks very much for sitting down with us. I think you guys have a very interesting story. It's a lot different than what we see with many of these junior mining companies, where they're just basically going down a path where we know that they're just going to have to keep diluting and diluting and diluting. This is I know it's not as exciting for a lot of retail investors who are just sort of banking on that one drill hole.
Right. Well, we have 10 different programs, so there's lots of opportunities for drill holes. But it's actually a really good point, because we were last year we were cash flow positive. So we created 1 million of free cash flow in the company. It's like going out and raising money. And then obviously every year what we want to do is be sustainable in our portfolio so that we're not raising money and diluting the shareholders.
I was going to say, but the royalty model certainly is exciting for a lot of investors.
Oh, absolutely.
Because we look at Franco-Nevada, it's basically one of the best performing mining stocks of all time. So
it's a great example of staying with the business model, and over time, it really starts to create a lot of value.
And as you continue to create value, hopefully you'll come back on here and chat with our audience, because it's great to chat with a former analyst turned CEO in a project that I think you guys are, well, projects. I think you guys are doing a lot of really interesting things, and it's great getting to hear about them. And as the story unfolds, it'd be great if you'd come back on here and tell us more about it.
Absolutely. Happy to do it.